Hey everybody, Preston Brent here with our weekly roundup through trading week ending November 10th, 2017. Let's take a step back for a second as we go into the end of the year. Take a look at the markets, where we've been, where I believe we're going to go over the short term, and then possibly into Q1 of next year, into the early summer. What you see on the screen here is a weekly chart of the E-mini S&P 500 futures. Now, the only thing I'm showing here for now are Fibonacci extensions, and let me show you how I generated them so that you can understand my pivot high and pivot lows for choosing these. You can see going back, excuse me, to highs that we made back in 2015. In the summer months of 2015, you can see we hung up here for quite some time. I mean, a long time actually. We set a record for not making new highs over 400 plus days. And we originally went up to around the 21-27 area, 21-25 area in May of 2015. And then we didn't break it again until July of 2016. And then this was also the time that we had a little bit of a downdraft in 2016. And we actually went down about 15%. In fact, the Russell went into a bear market for a week or so until we finally caught wind and started moving higher. So these are my pivot highs back in the summer of 2015, and then the lows in January, February timeframe, actually February of 2016. Now, choosing those, I've run extensions across the top here, and you can see as we seem to hang up at various extensions exactly where we've been and where we could possibly go near term. You can also see on this weekly chart, because it is weekly, by the way, that we've got what I call a poor man's bed. So we're setting up for a bearish divergence here, but we've got multiple jagged runs and multiple crosses in the MACD, all above the zero line. And it looks like it may roll over again here as well, which would suggest a little bit of weakness over the next 2 months. And if I zoom in on this weekly chart, you can see here where we've come up and we're just sitting south of a 2.5 extension off prior pivot highs and lows. So, and that's sitting around 2610. So let's just call it, for round numbers, around 2600 plus or minus 10 points. You can see this is the first red candle that we also had going back to September the 4th. And outside of that, when we really started our strong run, the third week of August. In fact, when I show you the Russell, you'll see that we were actually in the red for the year with the Russell. And we actually moved up over 10% very quickly in the Russell. So for those of you that have been trading the RUD, if you were in the Russell all year long and then happened to get out in the middle of August, you missed the entire run. But you can see this huge fast run here like this. I suspect there's going to be some softening in price. Now, we do have some underlying current that could make it bullish. Clearly, we've got strong earnings. We've beaten both top line and bottom line numbers. And at the end of the day, fundamental analysis, fundamentals will always rule. But near term, on a day-to-day basis, the market is a voting machine. And on a month-to-month basis, out 3 to 4 months, irrational moves can happen. But then eventually the fundamentals always catch up with the market. And for equities, fundamentals is basically profits. As I heard someone once say, it's the mother's milk of the markets is pure profits. And we're seeing profits not only in bottom line numbers, which can be engineered, financially engineered with earnings per share, like share buybacks and things like that, but on top line numbers as well. So that is, and we're getting this synchronized global growth, and I will show you those charts in a minute. So everything looks good. Now, when you do the combination of that with a possible tax cut the end of this year, early next year, along with repatriation of money, that's why the asset classes have really extended. I've got friends and hedge funds over in Europe as well as here in the US, and some trading buddies that have been trying to short this market, and they're just having a hell of a time. I've been telling you guys on my weekly roundup and our members, we're a buy the dip, and we've been that way, and I'm going to stay that way through the end of the year. But you can see where we're sitting right now. Now, if I were to take it down to a daily chart, okay, and you can see here where we hung up a pretty good bit around this 2450 area. But if I had to outline the key support points for us going into next year, let me just add all of my charting on the page here and pivot points and key technical indicators. You can see this upsloping channel here. It's about a 45-degree angle. We've stayed in it fairly consistent all year long. You can see a little bit of a weakness in the MACD, but I don't consider this anything because there is no bearish divergence going all the way back to the summer months. And if I blow this up, as I've told our members, right here, there are a couple of key points that I'm looking for. The first key point is, let me just see here what had happened here. Okay, let me just change my pen color for you guys so you guys can see what I'm writing. Help if my pen wasn't black. You can see right there, that's a key point right there, 25.42. You can see these two areas here, and this volume over price. We're sitting right on it right there. A lot of volume in here. So we've got, you know, the buyers versus the sellers, and they're duking it out right here. Okay, so and we're sitting right now on this key fib node right here at 0.238 at 25.71. Should we break that, we're going to come down and test this here. This would be my first level of support, my S1 value. We do have the 50 EMA and another fib node right here kind of holding us up a little bit. You can see this volume over price right here, and that would be my next level down outside of this little fib node at 25.25, right? So if I were to, let me just get my pen so I can write this on here. So 25.25 right here. And then this next one right here is 2,500. So these two areas right here are going to be key for me, or these levels, 2542, 2525, 2500. And they're all basically tightly coupled together. And off of our all-time highs right there of 2594, even coming down here like that, I don't even think it hits us at a 3% pullback, right? Remember, as the index gets higher and higher, the percentage pullback, we're dealing with a bigger number, right? So it takes a further drawdown to hit that. In fact, if I were to come in here and just show you where that would probably go, right, on that kind of pullback, let me just come in here and pick my ruler and start right here and then just draw it down to where I'm right around a 3% pullback. And if I put it on there, right in that area there, so you can see just slightly north of the 2500, 2515, 2517 gives us a 3% pullback from the all-time highs, okay? So if I blow this up just a little bit more so that you can see it, you can see right in this area here, give or take 2 or 3 points, 3% pullback off these all-time highs, right around my a key psychological barrier here of 2500. So I see that holding as we go through the end of the year. Should that break, that is a sign that there is word coming out that they're having trouble with the tax plan and Trump's agenda is not looking as good, and then we can give up a lot more points. You know, if that gives it up, then the next area that we can look at a possible support point takes us all the way down to the 2450, 2460 area down here. You can see all this volume over price down here. Okay. And that's a long drop from 2500. 2500, actually, it's not that big, but it will be big if you're in the middle of it. So that is, in my mind, our boundary, right? And if I were to, again, put a price ruler on it just to give us an idea of where that takes us from a percentage standpoint, that would take us down. It would give us our 5% pullback. We haven't had a 3% pullback in 250 plus days. We haven't seen a 5% pullback in quite some time either. And that would give the market room to consolidate down here. I don't think we're going to get that far. I think 2,500 will hold us. I don't even think we'll see that before the end of the year, short of anything happening from a fiscal policy perspective, meaning they're having trouble with their tax plan. That's kind of where I see it right now, guys. And if we look at the Russell as our canary in the coal mine, there are a couple of things we'll look at here. If we look at our rut, or let's look at the Russell futures, it may be a little bit better. You can see in the Russell futures how we've slowly moved down from that blast off of the rocket ship. You can see the 2017 open price. We were actually below it in the middle of August, and then we just took off. And then we moved up, and now we're slowly moving back down again. That is a vote of lack of confidence in the tax plan being done this year, because the Russell's going to be affected the most if they do anything fiscally with this. Now, keep in mind, all of this already has factored in a rate hike on December the 13th by the Feds. It'll be Janet Yellen's last press conference. But this has already got that rate hike built in of 25 basis points. So we're going to watch the rut very closely. The other thing that's already been given it up is the transports. Look at this. Transports are just like it's like falling off the table. This could be another canary in the coal mine for the markets, folks. So we got to watch this very closely. This could suggest that we could get down to that 2,500 level fairly quickly if there's any noise coming out of DC on that tax plan, and we're going to know that fairly soon. But on a good note, if I were to show you all the markets, if we were to look at the Japanese Nikkei index, I mean, this is a bearish candle. It's a bearish reversal. We went all the way up to 23,445, and then we had that huge hard down move. I don't think that's a signal of a directional change. I just think there's a lot of profit taking after that big move. And then, again, let's look at Chinese stocks. It gapped up Asher, and we're right in the middle of our channel. And if you look at the channel here, right, it's got a steeper run to it this year than the equity markets do here in the U.S. And we peaked up here at 31.42. Asher's a tracking stock for China shares. So that's looking very good. And then if we look at the all world index, right, Vanguard's all world, again, look at that, this channel. I mean, we've just been moving up in the same directional bias. Now we're making bearish divergences as we're going up. If this channel breaks to the downside, then you may want to make sure that you're hedged, because we're starting to see some weakness in the Russell, in the transports, and in this all world index. It could be just profit taking as we come into the end of the year. Could be a little bit of self-doubt on whether the Trump administration is going to get that fiscal tax policy through. We'll see. But that's kind of what I'm looking at right now. And then, of course, if we come down here and we look at currencies, you can see the British pound. I'm playing this to the upside. We've been in this channel here. It's very volatile, but we're in this channel nonetheless to the upside with the British pound. The U.S. dollar. Now, I've said that the U.S. dollar is shifted to a bullish stance. We've come down. We've kind of had that rounded bottom. We're starting to move up. There is no bearish divergence in this. We're now testing the bottom of this channel here. So I'm going to watch this closely to see if this breaks down, falls outside the channel, and comes back down to the 50 EMA. Right now, all we're doing is testing this head and shoulders pattern that I showed you guys last week, right? I mean, if I were to draw this line in here, you can see there's the left shoulder, there's the head, and here's the right shoulder right here, right? Like that. So, and here's the neckline right there. So we may come down and test that breakout right in that area there. So that is going to be the key for me. Is it going to hold and move back up? Or are we going to get back up inside the channel, or is it going to break and come back down and hit the 50 EMA? So it's kind of a non-call right now. It's more of a wait and see, which is what we've got to do here with the US dollar. I believe it's going to hold and move a little bit higher. I've been telling our members to get bullish, or at least play the dollar a little bit bullish back down here in the early September months as we started moving higher. Now that's kind of where we're sitting there on that one. And then, of course, if we look at gold, gold is, still working off, trying to hold the 200 EMA. You can see the 200 EMA is this yellow line. It's just in a sideways to slightly downward bearish bias at this point in time. If it breaks the 200 EMA, guys, it's going to go for a run. It's going to come down and challenge 1200, because gold honors technicals very well. Because there is no storage of value other than what people assign to it. It pays no interest, no dividends. It is strictly something for inflation or fear. And right now, there is no sign of inflation on the horizon. There could be a lot of fear, though. So let's see how this thing shakes itself out. But short of anything, any catastrophic geopolitical event happening in the Korean Peninsula or over in Iran and Saudi Arabia, I think gold near term is going to be more down than up. Copper, we want to watch copper as well. We have no bearish divergence here. If copper starts to break down, that is bad for global growth. Copper is kind of called Dr. Copper. So we want to follow it and see how this thing holds up on this drawdown right here. And then obviously oil, we've been doing really well in oil today, a little bit of a down day, but all it's doing is consolidating the huge massive run up that it had when it hit my resistance area here. We've been bullish oil since the early September months. We are 20 for 20 in our oil trades. We're putting some new ones on here in the next week or so. I'm covering oil in detail in our oil trades for our option masters. We had our kickoff session last night. It was really great this past Thursday night. If you're not a part of it, it's not too late yet. I'd definitely check it out. And oil, we'll dissect our oil trades and how they're working, but it's a great way to take money out of the oil market. But you can see we're just kind of running in this choppy pattern here. The breakout area is to the upside. That's what the charts seem to indicate to me. We're also into gasoline, and we're playing gasoline successfully. You can see this move up higher in UGA, and then when it broke out there, it took off like crazy. We're playing UGA. We got a nice trade on that one. And then the other one that we're playing is natural gas. Nat gas also had a nice up move today. You can see we broke out of this prior pivot high here. We're playing nat gas long into the end of the year. Again, if you're missing some of these trades, folks, I'm telling you, man, don't leave money on the table. Come check us out. All right, everybody, that's my update for the weekend. I will be up in my Connecticut office from my beautiful sunny Florida office down here where I just went for a swim today. Up in Connecticut, I'll be lucky to get outside without freezing. And then next week I speak at Boston University, and then I will be back down here again after the holidays, back down in my sunny Boca Raton, Florida office. All right, everybody, have a great weekend. Happy Veterans Day, everybody. All you folks out there that served, my heart goes out to you. Have a good one, and I will be in touch with you guys later. For our members, I will see you this Sunday night in our weekly market watch. Take care, folks. Ciao.